Good morning, everybody. Today's Thursday, September 20th, 2012. Welcome to my video update. Three things we'll talk about today are the economy, the markets, and the accounts. First off, looking at the economy, the big news last week was the Federal Reserve announcing quantitative easing. They said they're going to do an unlimited quantitative easing, starting with $480 billion of mortgage-backed securities that they'll purchase $40 billion a month for the next 12 months, equaling $480 billion. I'm not really sure how much effect this is going to have on the economy. There's a lot of studies saying that quantitative easing 1 and 2, have put tremendous stress on the Fed's balance sheet, but really haven't led to economic growth. It's been great for the stock market, but the economics behind it are very tough to justify. It kind of does look like it was a political move more than an economic move, and because these low interest rates really are not spurring any job growth, and we've seen that with the numbers. Moving forward, we still do have some challenges. We've got guidance from a few companies has been lowered for the third and fourth quarter. FedEx, Bed Bath & Beyond, and Norfolk Southern have all reported, have all lowered their guidance for the upcoming quarters, which shows that there is a general slowdown in the economy. We also have to worry about the election. Right now, it does look like that Obama's going to win the election, but they still have to deal with the fiscal cliff. So, with the economy, we still have a lot of challenges. However, if you turn on CNBC and watch the stock market, you'd never know that. When we look at the markets, here we are hitting highs for the year, day in and day out, and that's really ever since up until the Fed announcement of the quantitative easing. Whether or not we can still stay up here is going to be a question, and we're going to have to see. But in the meantime, there's a saying on Wall Street and it's a New York saying. They say the data doesn't matter. And they use the accent there, but it really is true right now. It doesn't matter that FedEx reported lousy earnings or lousy guidance. The stock still goes higher because of the Fed action and how it's placed in funds and represents on the index, and the stock prices have gone higher. However, at some point the data is going to matter, and we really need to pay attention to that. Right now, we're just going to keep looking at the charts and using our strategy and make sure that if the market does turn, we will be protected. Finally, that brings me to the accounts. Looking at the accounts, a lot of the commodity-related stocks have done phenomenal lately. The gold miners did phenomenal. We made 10% very quickly. Also, commodities, the individual commodities that we own in our funds have done very well, and also, emerging markets have come back. A lot of good things are working right now in the portfolio, and we're going to hold it until it just doesn't work. You will see a couple trade confirmations coming your way because I have made a couple of moves in the account. For example, we did get rid of we sold our treasuries and replaced them with our TIPS fund, which is a treasury inflation protected security. I think that's just a safer place to be right now. And we did buy some basic material stocks, which have lagged lately, and I think are going to end up outperforming in the long run. With that, please feel free to give me a call with any questions, and I hope everybody's having a great fall and enjoying the weather. And again, thank you for being my client, and I'll always do the best for you. Have a great day.